business update conference call of Lumax Auto Technologies Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anmol Jain, Managing Director of Lumax Auto Technologies Limited. Thank you, and over to you, Mr. Jain.
Thank you. Good afternoon, and thank you for joining us at such a short notice. Along with me on this call, I have Mr. Deepak Jain, Promoter Director, the management team of Lumax, Mr. Ashish Kolati from KPMG, our deal advisor, and SGA, our investor relations advisor. Over a journey of decades, we have established a strong legacy forged by deep partnerships with global players and meaningful relationships with our customers through continuous innovation, advancement in technology, and pan-India state-of-the-art operations. This has brought us to a strong position where we have achieved a sizable lead in the automotive component space in India. To further enhance the company's product portfolio and bring technologically advanced products to serve the Indian OEMs, we are happy to announce that we shall acquire majority stake in IAC Group's India business. This is in line with our long-term business strategy to grow our plastics domain and increase our wallet share in the buoyant and promising passenger car segment in India. This inorganic partnership further expands on our core competency in injection molding, painting, and assembly operations. I'll give a brief overview of the IAC Group, followed by its India business. IAC Group is a leading global supplier of powertrain agnostic automotive interior and exterior systems and components. It is one of the major suppliers to Ford, Volkswagen, BMW, Land Rover, Volvo, General Motors, and Jaguar, amongst others globally. It is headquartered in the US and has a presence in 17 countries with annual revenues of over $3 billion. The group has 7 state-of-the-art technology and engineering centers present across California and Michigan in the US, Germany, Japan, Mexico, India, and Thailand. The product portfolio consists of instrument panels, cockpits and consoles, door panels and trim systems, headliner and overhead systems, and other interior and exterior components. Now coming to IAC India's business, it is a leading Tier 1 manufacturer of interior and exterior components headquartered at Pune. Its product portfolio comprises of instrument panels, cockpits and consoles, door and trim systems, headliner and overhead systems, and other components. IAC India caters to various leading OEMs such as Mahindra & Mahindra, Volkswagen, Maruti Suzuki, Fiat, and Volvo Eicher. The company generates 87% of its revenue from the passenger vehicle segment and 13% from commercial vehicles. Mahindra is the most prominent customer of IAC India, followed by Volkswagen, Maruti Suzuki, and Volvo Eicher commercial vehicles, amongst others. It has 5 manufacturing plants, 2 in Chakan, Pune, and 1 each in Manesar, Nashik, and Bangalore. It also has 1 in-house state-of-the-art engineering center in Pune with end-to-end capabilities in product designing and engineering, product development, program management, and tooling development. It has a team of over 150 engineers and designers with global experience catering to all tool development requirements from its customers as well as from its global sister concerns. Coming to the financial performance of IAC India, in FY20, the company had revenues of rupees 341 crores. In FY21, the revenue stood at rupees 284 crores on account of impact of COVID-19 pandemic. As the industry has shown revival, revenues for FY22 stood at rupees 481 crores And for the current fiscal, 9 months of FY23, the estimated revenues of the company stood at rupees 470 crores. There are numerous strategic rationales leading to this acquisition. A significant shift to passenger vehicle and SUV segment from the current two-wheeler business, which resonates and complements Lumax Technologies' strategy of growth in passenger vehicles and expansion of product portfolio in plastics being the prominent one. There will be multiple synergies which will come into place, such as leveraging LATL's current product portfolio across multiple joint ventures by doing the entire interior vehicle development, system integration of interiors, as well as lighting. LATL will also be adding new customers to IAC's existing business, thus bringing value for shareholders. Post the completion, we anticipate an addition of significant profit pool from the passenger vehicle segment, which is set to witness strong growth in the coming times vis-a-vis the commercial vehicle and two-wheeler segments. Moving to commercial contours, this acquisition will take place at an equity valuation of rupees 587 crores, and IAC will continue to hold 25% stake. 75% of the stake will be bought through a SPV at INR 440 crores, which is funded by debt and internal accruals. The strong free cash flow generation in LATL and IAC India will ensure debt repayment in 5 years. LATL and IAC will work as strategic partners and leverage their respective competitive strengths to drive IAC India's business forward in the coming years and work towards unlocking potential synergies across products, customers, technology, as well as manufacturing excellence. IAC India's day-to-day business and operations will continue to be managed by its existing professional management team, which has successfully delivered strong and consistent results over the last decade. With this, we open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Kanika Kothari from Kothari Securities. Please go ahead.
Yeah, hi, good afternoon, sir. So I just wanted to ask how much will be the amount of additional revenues we can expect with this acquisition going forward? I mean, what will be our growth aspirations for IAC India?
Well, as I said, the 9 months for current fiscal of IAC India is at about 470 crores. On a pro rata full year, FY should be give or take anywhere between 575 to 600 crores. And so that would be partly consolidated in this year because we are expecting closure in March. But for next financial year, let's say we are expecting a double-digit growth in IAC India on the back of strong Mahindra volumes, which are likely to grow in the next fiscal as well.
So do we have any order book?
Yes, we have a strong order book. As of now, it is not quantified, but it is pretty much across platforms of Mahindra and Mahindra are already with the company.
Okay. I mean, your investor presentation also mentions major revenues from Mahindra and Mahindra, but what will be your strategy of customer addition in this side, India?
So we will add customers post the closure. We will be approaching customers, and LATL has very strong inroads and relationships with most passenger car and commercial vehicle makers in India. So we will be chalking out our customer strategy once we are fully completing this formalities.
Understood. And sir, with this acquisition, now there will be many new products which will be added to our portfolio. So is there a plan to cross-sell these products to our existing customers?
Well, absolutely. I think Most of the customers of IAC India are also existing customers of Lumax Technologies, whether it is Mahindra and Mahindra, Volkswagen, or Maruti Suzuki. So the idea would be to increase our wallet share with these customers going forward.
And other than increasing the wallet share, what will be our customer addition strategy? I mean, I'm saying this in relation to both Lumax and IAC for both new and existing products.
Kamika, this is Deepak Jain here. I think we've already said that we have and see immense synergies between both the entities from Lumax Group as well as IAC. We are very, very, I would say, focused and also the PV segment and the SU segment is very buoyant. So obviously we will try, once we have closed the deal, to actually then approach other customers where we actually already have good relationship to enhance the business portfolio and the customer portfolio.
Okay, sir. Understood. Yeah. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Next question is from the line of Abhishek from Dolat Capital. Please go ahead.
Good afternoon, sir, and congrats for acquisition of IAC India.
Abhishek, sorry to interrupt you. Your audio is not clear. May I request you to speak through the handset?
Hello.
Go ahead.
Yeah. Good afternoon, sir, and congrats for acquisition of IAC India. Sir, in presentation you mentioned revenue of around 595 crores and EBITDA of 90 crores with a EBITDA margin of 15% and ROC is a 35%. Is it FY33 expected number or what number this is?
This is for calendar year 2022, which has already gone by.
But EBITDA margin is quite high, 15%, return on capital employed is 30%. Is it 35% kind of the margin business?
In terms of gross margin?
No, I am talking about the return on capital employed.
Correct. So the EBITDA on capital employed, you're talking about, I didn't get your question. The EBITDA is at about 15% for CY22.
Okay. But in a standalone margin, I was checking it is around 9% in FY22. So consolidated margin should be at a lower than this.
We haven't given a consolidated margin. I think the number which you are looking at, the 595 crores with almost close to 15% EBITDA, is for IAC India for CY22.
CY22. And in a 9-month FY23, what is the EBITDA, interest and PAT number of IAC India, sir?
Once we close the transaction, I think we will be in a better position to give out all detailed numbers. But from a revenue standpoint, as I mentioned, 9 months FY23, we've dropped about 470 crores in IAC India.
And what kind of the EBITDA can we expect in the margin terms, sir? It is higher than the existing business by the 2 or 3%?
So the margins at EBITDA level continue to be in the teens. As you saw in CY22, it was close to 15%, and I think the teen EBITDAs would continue to sustain going forward.
Okay, sir. And sir, what is the domestic versus export revenue contribution in IAC India?
There are a couple of programs which are exported from IAC India, but it is largely to service the domestic Indian passenger car market.
Okay. So can you quantify the numbers, to export versus domestic?
Abhishek, Deepak Jain here. Again, I think as I said, we are here for the investor call to say this is the signing of the deal. We still have to close the deal. I think once you close the deal, I think we will come back to the investors to say what would be the figures going forward. I think currently, we just want to tell you the company, the basically product portfolio and the synergies what is happening with basically Lumax Group overall and the strategy going forward. Thank you.
Okay, sir. And sir, as you mentioned about that, you will get a lot of the business from the Mahindra and Mahindra because of the new launches and all. So how much capex would be required to expand the IAC India business?
So So again, once the transaction closes, Abhishek, we will be getting into 3-year, 4-year outlooks, which will address revenue growth, order book, capex requirements, margins, etc. I think right now I would be only able to tell you what is the total capital employed and what is the current revenue and the EBITDA level as of CY22.
Okay, sir. And sir, post these acquisitions, will you take technology assistant from IAC and also will pay royalty to them?
So currently, the technology, we have a long-term partnership with them, and we also, India has its own basically center which has 150 engineers working, not just for domestic programs, but also global programs. This will continue and the technology flow will continue at this basis.
So most of the technology is already available in IAC India through its engineering center in Pune, and that is a part of the transaction. Over and above that, any new innovations at a global level will continue to flow in from IAC globally into IAC India on an as-is basis.
And sir, in IAC International Group, what is the total revenue size and what are the key products there apart from this IAC India business? Can you throw some more light there, because we have a very less knowledge of this IAC International Group?
I think I mentioned that the group at a global level is more than $3 billion annual revenue. It has almost 45 manufacturing facilities spread across 17 countries and employs more than 18,000 people. And at a global level, the products are similar to what they do in India, which is the instrument panels, the cockpit, also the door panels, center consoles, headliners, etc.
Okay, and one question on this: if the company has this much of ROC, what you are saying around 35% kind of the ROC, why this company is selling its stake of India? Is there any other strategic benefit you people are getting?
Well, I think Lumax we've always had 9 partnerships. 40 years is a long lasting. I think during discussions, they found IAC India that Lumax could provide substantial value going forward in partnerships, especially in market dominance in India, and that's why we have partnered with them. And I think we've been able to actually get the deal with both sides accepting the financials.
Thank you. I'm sorry to interrupt you, Abhishek. We have a few participants in the queue. I'll request to join the queue again for a follow-up question. The next question is from the line of Jinesh Gandhi from Motilal Oswal. Please go ahead.
Hi, sir. My first question pertains to, can you talk about the competitive positioning of IAC in India in terms of what would be their market share in the targeted products as such, and who would be your key competitors in the acquired business?
So there would be, let's say, the top 3 or 4 competitors with similar products in India would be number 1, the Cafe Group, which recently acquired the Forasia India business of interiors. Number 2 would be the Motherson Group. Number 3 would be the Taco Group. And also there would be, for one particular product, it would be the Krishna Group for Maruti Suzuki.
Okay. And this business which we acquired would be among top 2, top 3 in India, or would be lower than that?
I'm sorry, your question was not audible.
So would IAC India be among top 2, top 3 players in the respective product categories, or it would be slightly lower than that?
Yes, it would be in the top 3.
Okay. Secondly, as far as I see, most of the customers are common between Lumax Auto and IAC Auto. So apart from the cross-selling opportunity, what are the other synergies do you see between the business? Do you also see any potential to further improve profitability of this business, given much wider presence of Lumax Group in the country?
So there would be multiple synergies. Number 1, obviously, as I said, we are expanding on our core competencies of injection, paint and assembly. That has been the forte and core competency of Lumax Group. So we are expanding not just from the cross-selling on customers. As I mentioned, a lot of the joint ventures of Lumax Technologies does interior products like the gear shifter, also the power window switches, etc. So there are a lot of synergies where we can actually integrate all of them and sell that as a complete assembled solution to the customers, and we could also get a lot of engineering synergies as well as operational manufacturing synergies. Apart from that, being plastics and polymers being the key raw material, of course, our buying quantum takes a big leap, and I think there could be also a lot of sourcing synergies which would come into play as we move forward.
Okay.
So I think globally, as I mentioned before, a lot of the lighting players have been bought over by plastics people, be it the Foresia Hella or the plastic Homium Vistion transaction. So I think there is definitely a need at the OEM level for integrated interior lighting with interior systems, and I think Lumax would be an enviable position to offer that to our OEMs in India post this transaction.
Got it. And with respect to where they are in terms of their asset utilization, is there material scope to increase revenues from where they are today, or will have to put up new capacities? And in that context, if you can talk about the capex intensity of this kind of a business.
So I think all of that will come into play post the transaction is closed, when, as I said, we will make the budgets for next year and 3-year roadmaps, and I think all of that in terms of asset utilization and growth opportunities will be in a better position to answer them.
Okay, no worries. And lastly, can you clarify the Pune Engineering Center is part of the deal, or that will remain independent?
It is very much a part of the transaction.
Okay, great. Congrats and all the best.
Thank you.
Thank you. Next question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, hi. Congratulations on this acquisition. So I have a few questions. So first one is on the remaining stake. I think you bought 75%. So remaining 25% stake is there any kind of clause that after a few years you can take it over, or call option, put option kind of thing here?
Richard, thank you. I think currently we are going to focus on partnership and co-creating it. As I said, in our investor presentation, we're taking it through internal accruals and debt, which possibly after 5 years we should be able to kind of service it and pay it back through the company's cash flows itself. So as of now, as I said, we look forward to engaging with ISC on co-creating value and taking their partnership and technology as well towards the Indian market and further growth business.
Okay. But is there any call or put option involved in this transaction after 5 years for the remaining 25% stake?
As of now, I think this contour of the deal is not there. So I think we will continue to have discussions with ISC.
Okay, perfect. The second one is on, because this is an international group, so are there possibilities of exports as well? Because globally a lot of companies are thinking about outsourcing it from India. So can, or are they already doing it? So any synergies on that side as well? If, or something which you can sell from your existing portfolio, which they might not be manufacturing internationally, anything of that sort?
First and foremost, the current portfolio of ISC India, they are manufacturing all internationally. ISC India does have certain basically export orders which get serviced through the sister concerns of ISC Global. Wherever there is competitive strength, we will leverage ISC India's thing. But the main purpose of Lumax getting into ISC India is to focus and grow the portfolio of ISC Group within basically the domestic market. And we do feel that this is an opportune time because right now the PV segment, particularly the SUV segment, which ISC has a high commanding position in, is poised to grow further.
Okay. So the next one is on plants. So you already have, I think, a few of the facilities doing plastic business. Are there scope on the kind of plant rationalization as well, or things are going to remain independent from the existing Lumax facilities?
I think from a facility standpoint, they will remain independent, but as I mentioned, there will be a lot of synergies, be it operational or be it better capacity utilization. So all those synergies will surely come into play, but from an infrastructure point of view, they will remain independent.
Okay, understood, sir. Great, and thank you.
Thank you, Rishabh.
Thank you. Next question is from the line of Nisarg from NV Alpha Fund. Please go ahead.
Yeah, good afternoon, everyone. So my first question is that very rarely we have seen a auto ancillary business having 30% plus return on capital. Is this ROC a function of the depressed gross block, or is it a function of very high asset turns in the business? And what is the incremental ROC if you were to do a capex in the IAC business?
So number one, I think the ROC is not on any depressed capital employed. It is definitely a high value add and better asset turn ratio. Going forward, again, as I said, once we are in the driving seat post the closure, we will be able to share a lot more in terms of what would be the incremental capex and going forward how the roles would turn out to be going forward in terms of the order servicing the order book.
Okay. So what is the value proposition that we sort of offered IAC International and convinced them to sell the asset to us at a very reasonable valuation?
Good question. Well, I think number one, they were looking for partners in India. I think Lumax Group has a pretty good track record in managing global partnerships. Number two, I think the whole Lumax Group's leverage and engagement across OEMs and very deep engagements. IAC India, of course, has leadership with Mahindra and other customers, but we think that giving Lumax's engagements, we can further expand the customer penetrations with basically IAC and help IAC India to basically grow the business.
And two small questions, sir. There is no catch in this transaction of where you would have to pay them a royalty. Just confirming that.
For the current product portfolios,
yes.
It is as is, and we will not be getting into a royalty agreement.
Okay. And lastly, sir, there is no debt on the IAC portfolio, right?
There is negligible debt. I think the debt amount basically is around about 20 crores or so.
That also is more of a working capital, short term.
Oh. All the best and congratulations on this fantastic acquisition. Thank you.
Thank you. Next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, my first question was, given the diverse products of Lumax Autotech, so could you please tell me what is the average content per vehicle in terms of two-wheelers, PV as well as CV for Lumax Autotech, including all the subsidiaries as well as JV? And separately, what will be the value content per vehicle for IAC India in PV and CV?
So the first part, again, we will probably, I think we've answered it many times before, but it depends really on the customer and the model where we are present across our various joint ventures and subsidiaries. But answering to your second question, the average contribution per vehicle depends on model. The highest is almost close to, let's say, give or take 25,000 per vehicle. Also, it goes to 20,000 on certain other models, and on certain other models, it could be as high as 10,000 to 15,000. So it depends on really what the product mix is, which we sell on model to model. But just to give you an average, it's, let's say, give or take 8 to 10,000, and it could go upwards to around 30,000 per vehicle.
Yes, so the content that you mentioned was for IAC India, but separately, could you give just a ballpark figure on an average basis what would be for Lumax Autotech?
What we will do is we'll tell our basically finance department and the communications, set you a separate thing on the Lumax Autotech. We've mentioned many times in the call, we'd like to put these time for basically answering more on IAC India. Thank you.
Okay, sir. And so secondly, for the products in IAC India, is there any aftermarket scope or there will be an opportunity only to fully supply to OEM?
So largely this is an OEM transaction.
Okay, and sir, the third and the last question, what is the current utilization levels of the company IAC India, and any plans to further deploy any capital in the company?
We will be better placed to answer this once you close the transaction. Thank you.
All right, sir. Thank you so much for answering the question. All the best.
Thank you.
Thank you. The next question is from the line of Anshul Mittal from Care Portfolio. Please go ahead.
Hello. Yes, sir. Actually, I wanted to understand the market size or the industry size of the products which IAC has to offer. Just in terms of understanding that, is it mainly towards the features or towards of a PV, or it is mainly towards decorative or aesthetic side of a car?
So it's a very high technology part. I will not be able to give you exact number in terms of the market opportunity. But as I said, the competition is limited. There are pretty much only, let's say, 4 or 5 key aggregators and integrators of the entire interior systems. But it's a high technology part, and it's not just decorative. It is also high on the look and feel and the touch and feel of the vehicle. So there are premium, different kind of fabrics, upholstery, etc., which is there, and also with the whole airbag regulation, it becomes technologically very, very important to do the assembly and as well as the manufacturing of certain products, which become the essential part of the entire door panel and the IP cockpit.
Okay, understood. So, sir, considering that the content per vehicle is on average of 10,000 to 30,000.
Anshul, sorry to interrupt you, you're not audible.
Just a second. Hello, am I audible now?
Yes, go ahead.
Yes, go ahead.
Hello, yeah. So, just as considering the content per vehicle is around 10,000 to 30,000 in the cars. So, trying to understand the market size. So, for close to it will be around, I guess, 6 to 7,000 crores in India, considering the auto PV size, and the content per vehicle is almost 9 to 10% of what the industry size is.
My guess is as best as yours. As I said, we haven't cracked these numbers. We will be looking at it after the closure of transaction.
Okay, sir. And also, sir, this IAC is only focused towards automotive, or are they planning to expand into other industries as well?
IAC India would be automotive focused, please.
Okay. Thank you, sir. That's it.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that will be the last question for today. I hand the conference call back to the management for closing comments.
Well, I take this opportunity to thank everyone for joining into the call. We will keep updating the investor community on a regular basis for incremental updates on your company. I hope we were able to address all your queries. For any further information, please get in touch with us or Strategic Growth Advisors, our investor relations advisors. Thank you once again.
Thank you very much. On behalf of Lumax Auto Technologies Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.